Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
There are two restaurant stocks in particular that Eric Dutram, who is our editor of Zach's Surprise Trader, would like you to know about this earnings season. The first one is Chipotle. Right now, have they totally recovered from all that negativism?
Not at all recovered, I think is probably a better way to put it.
Okay.
They've tried to do this rewards program to sort of stir up some more demand here in this quarter, but that's going to be a real big thing to watch this earnings season when they report on the 21st. The stock has really been beaten down here. It hasn't recovered at all, so that's going to be a big issue for this company going forward. If we look to the chart here, we can see that the earnings estimates have really fallen off a cliff here over the last couple weeks and months. As we can see, the 2016 numbers have fallen, and then the 2017 numbers have also kind of slid a little bit. You could argue that the numbers are starting to bottom out here, but I don't know. It's going to be a tough call here. And given that the stock has fallen from about $750 a share to below $450, very dicey spot to buy Chipotle stock. It does have a Zacks rank number 4 sell, and it has a D VGM score. We're also seeing a negative earnings ESP for this stock. So it's kind of a triple play of bad news for Chipotle. So while this could be enticing to some investors, trying to get in the stock on a sort of a low patch here, I'd wait to see how the earnings estimates come in for this name first.
Yeah, and depending on when that rewards program took hold, it may take a while to see that show up in earnings at all.
For sure, and I think it's just for the summer too, so it's going to be a real short-lived thing. But yeah, it's going to really matter what their outlook is if they're seeing some people start to come back to the stores in droves.
All right, next in 5 minutes or less, Domino's Pizza.
Yeah, they
delivered to your door.
Yeah. Domino's is basically the polar opposite story of Chipotle.
They announced some summer discounts, food discounts.
Yeah, I think they had some 20% off online, or maybe it's 50% off online ordering.
Yeah.
I know here at the office we're big fans of Domino's.
Mm-hmm.
Their pan pizza is pretty good. I'd recommend that. But they also report on the 21st. This company is a Zacks rank 3. It does have a B VGM score, so a bit better on the fundamental look. If we look to the recent earnings estimates and the chart for this company, we can see this has been a pretty incredible stock to own, regardless of what you think of their pizza. The shares have gone from about $25 a couple of years ago up to this $115, $130 range. So huge growth for this name. They've seen great trends in the earnings estimate revision, so analysts still like the growth outlook. Some of their competitors are starting to finally catch on to this online ordering and stuff like that. I know Pizza Hut just put out this emoji ordering capability. So that can be sort of a concern for the outlook for this company, and especially given how much shares have grown here over the last 3 to 5 years. You got to think this trend is going to end sometime soon. But given the growth, the positive, the positive stats we see here with that BVGM score, I think this one could be still promising for earnings season, and it's definitely a better pick than Chipotle this time around.
All right, own either one?
Do not.
All right. Eric keeps his eyes on what goes on during earnings season and comes to report scorecard data to you periodically throughout the reporting period. So you may want to check back to these videos frequently, especially during the reporting season. And check out other stock information on our website, Zacks.com. With Eric, I'm Terry Ruffalo.